Hello everyone, this is Istani, and as usual, let's first check the return of the previous package that I have introduced 2 weeks ago, and then let's see the new package for the next 2 weeks. Let me start this video with this famous statement that 95% of the people they lose money in the trading, and only 5% at the end they manage to earn money from trading. The reason is that trading needs an emotionless discipline, which is difficult for human to achieve. And that's why I have chosen machine trading. In this strategy, I use a code which is equipped with different technical analysis to select a package of 8 or 15 stocks for a duration of 2 weeks. And at the end of these 2 weeks, I sell the previous package and buy a new package. And then bi-weekly, I post a new video to check the return of the previous package and also to introduce the new package. As I have explained in the previous video, I have added two new features to the videos. One of these features is market forecasting using machine learning technique. In this technique, I trained a machine learning tool with different market indicator in the past to forecast the future. Here, for example, you can see the market forecast for Nasdaq Composite for a duration of 90 days. These dot points show the market forecast, and the red curve show the price changes during these 90 days. For 2 days, for here you can see 2 days forecast and 4 days forecast. As you see, this method at the end is not able always to predict the behavior of the market, because market behaves according to the new news rather than similar condition in the past. The second feature is the package of 5 stocks instead of the package of 15 stocks in order to reduce the cost of the brokers. However, although the return of 5 stocks is higher, but the risk of 5 stocks also is higher than 15 stocks, because if one stocks in this package drops, this risk or this loss will be split among 5 stocks rather than 15 stocks, and it is clear that then the risk will be higher. As usual, let's first check the return of the previous package, and then I will show the next package for the next 2 weeks. And I will show first the return of 5 stocks package and then 8 stocks package. Here is the package that I have shown in the previous video. These are the tickers of the stocks in this package, and the buying price means the price at market close on Friday afternoon. And as usual, here you can see the price changes for each stocks during 90 days. And these are the normalized price. And now let's see the return of this package. These are now the return of this package, the return of each individual stocks in this package. As you see, the returns are changing between close to 5% and minus 7%. And the average of this package is minus 3%. And compared to the market, as you see, for example, S&P 500 was minus 2% and Nasdaq close to minus 5%. Then we are more or less with this package, more or less the same level as the market. And here you can see also then the price changes. The price changes after these 60 days is the price changes during the last 2 weeks. Before checking the return of 8 stocks strategy, let's first add our last package to our return since the beginning of the year. Here you can see with this last package, our return, accumulative return since the beginning of the year, and end up something close to 34%. As usual, you can read the accumulative return on the right axis together with this orange curve, and the return of each individual package on the left axis together with these blue bars. And as you, for example, the return of the previous package, as you have seen, was minus 3%. which has been shown with this bar. For 8 stocks strategy, here you can see the return of the previous package that I have shown in the previous video. As you see, the returns of each individual stocks are changing between -7% and plus close to 5%. And the average of the previous package, as you see, was minus than 2.5%, which is slightly better than 5 stocks strategy. And similar to 5 stocks, again, you can read the price changes during the last 2 weeks after these 60 days in these charts. Now, if we add the return of the previous package to our return since the beginning of the year, we end up something close to 13%, and which is at the end will be slightly less than the 5 stocks package. But however, as you know, then the risk also is lower than 5 stocks strategy. Before checking the new package for the next 2 weeks, let's have a look on the market forecast for the next coming weeks. And then we will see the new package. As usual, here you can see the market forecast for 4 different indexes: S&P, Jones, Nasdaq, and Bitcoin. And now this orange curve shows the price forecast for the next coming weeks. And this blue curve shows the price changes during the last 1000 days. Let's now focus on this last part. Here is a zoom in on the last part of these price changes. Then the blue curve shows the price changes during the last 15 days. And this orange curve then shows the market forecast for the next 5 days. Before checking the forecast, let's have a look also on the previous forecast. This is the time of the previous video. If you have watched the previous video, we expected an uptrend by the end of the week. However, as you see, such uptrend happened, but 2 days. But after the 2 days, then the market drop. This part was not predicted in the previous forecast after these 2 days. For the next week, as you see here, also we expect an uptrend, at least for the S&P 500, and up to by the end of the week. However, for the other Jones and Nasdaq, we don't expect a significant increase. And at the end, as I have explained in the previous video, the chances that S&P follow such prediction is more than the other indexes because there are more stocks included in these indexes, and then the chances that it follows such a prediction is more than the others indexes. Now let's check the new package for the next 2 weeks. I will first show the 5 stocks package and then 8 stocks package. This is the package, the 5 stocks package, which has been selected with this technical analysis and machine learning tool for a duration of 2 weeks. These are the tickers of the stocks in this package, and these are the price. Buying price means the market close price on Friday afternoon. And as usual, here you can see the price changes, normalized price changes during the last 60 days for each stocks. And this is the 8 stocks package for the next 2 weeks. These are again the tickers and the buying price. And as I have explained in the previous video, since I replace one by one the previous package with this new package on Monday after the market opening, then the price which I buy could be slightly different than these prices. And again, you can see here the normalized price for each stocks for this 8 stocks package. And then I will post the next video on the 8th of January, and we can check then the return of this in this package in the next video. Let's hope for the best and then talk to you in 2 weeks. In the rest of this video, I will go through the return of this method since the beginning of 2017 for those who has not watched the previous video. As I have explained in the previous video, in this strategy and method, I used a code which is equipped with different technical analysis and machine learning techniques to select a package of 8 stocks for a duration of 2 weeks. And at the end of each 2 weeks, I sell the previous package and buy a new package. And I post bi-weekly then a video to show the new package and also to analyze the previous package. Here you can see the return of this method since the beginning of 2017 for 5 stocks strategy. And as you see at the end of this November 2022, we reach something around more than 900%. And as usual, you can read the cumulative on the right axis together with the orange curves and the return of each individual package on the left axis together with the bar. In the next slides, I will go through the return of each year separately uh, for those who are interested to know more about the return in each individual year. Starting with 2021, as you see here, the return of this method in 2021, and as you know, this year was a very good year for trading. And as you see, the return of this method at the end of the year slightly exceed 100%. And the minimum happened in November, and which was close to -3%, and the maximum happening in the end of January was more than 11%. 2020, as you know, at the beginning we had a drop in the market due to the pandemic. However, during the rest of the year, this has been recovered, and at the end of the year, it was not an bad year for trading. At the end of the year, as you see, the return of this method reached something around 40%. And the minimum happened, which happened in March, was -25%, and the maximum was +15%. 2019, the return of this method, as you see, reached something around 67%. And as you see, the maximum was something around 6%, which happened in June, and the minimum return also was close to -6%, which happened in the May. As you know, 2018 was not an ideal year for trading. However, as you see at the end of the year, the return of this method was positive and reached something close to 12%. The minimum was something close to -8%, which happened in March, and the maximum was close to 7%, and it happened in May. And finally, here you can see the return of this method in 2017. As you see, the return at the end of the year reached something around 45%, and the minimum happened in sometime in April, and it was close to 2.5%, and the maximum happened in again end of April, and it was more than 6%. Then with this slide, we'll finish the return of this method since the beginning of 2017.